Share Shootout brought to you by Lion of Africa Insurance, insuring South Africa's future.
Things are getting hotter and hotter by the week. This is Share Shootout League, only on CNBC Africa. I'm Bruce Whitfield, and this is the most vicious stock-picking show on television. This is CNBC Africa, first in business worldwide. Now, does Phansi Tlakula have any chance of seeing out the elections? Is it true that Beacon actually ran out of Easter eggs as the Easter Bunny came in from the cold and raided the stores? And what really happened to Gareth Cliff? Maybe it was a WeChat offer he just couldn't refuse. Now, we don't have the answers to any of these highly crazy and fundamental questions. What we do have, though, for you is the SSO League. Coming up, let's take a look at how results from last week's match between the Scot and the good guy changed the league standings. You have a look at that. As it stands, the Scot and Maverick lead the standings after match day 2. Remember, my producers have taken away my superpowers. You are the judges, and you must vote by using the competitor hashtags. Now, how will our next match change the look of the league? We've got a man who fell off the slopes but landed on his enormous feet. He's running dog. Another that some say he comes here to get a break from his little bundle of joy. He is Value Guy. Let's check out the players.
My name's Gary Booysens, Head of Trading with Vunani Private Clients. At the moment, I'm experimenting with enhanced alpha trading. You almost go and find value, good quality companies, and then pick them up, hold them for the long term. As long as it's got solid fundamentals, you put hedges in place to try and get that little bit of enhanced performance. So it's a philosophy, new philosophy, but we're trying it out. So it's going to be interesting. I think lots of prep work. I mean, it's a very tough show because you never know what the other contestants are going to do, but we're going to have to really go and dig out some good opportunities for the viewers. And yeah, I think also throw in a few curveballs, try and find something, some of the more obscure stocks that are showing value. So far, my biggest competition has probably been Mike Harworth and Sasha. They've always been tough to beat. I think I have a shot at it. I think maybe the track record has been fair so far, but it's definitely going to be tough. I just hope the audience is going to base their decisions on the quality and the performance of the shares, not just on the explanations.
Nic Norman Smith, Chief Investment Officer of Lentus Asset Management. I follow a value investing approach here at Lentus. We generally are quite contrarian, so looking for areas of the market that people are really hate and are nervous of, and that's where we believe we can find the opportunities. I think it's about finding some stocks that the audience really like, exciting, and try and spice things up a bit and not just have the boring old favourites. I think Bruce Whitfield is definitely going to be the biggest troublemaker on the show. Yeah, absolutely, one must be positive. I think it's going to be a tough competition, so for sure.
I hope you all vote for Gary Booysens from Vunani Private Clients after that vicious comment from Nic Norman Smith from Lentus Asset Management for a chance, of course, to get the leaders to the top of the log. It's all up to you. It's all up to how you vote as to how well our competitors do. The house rules, they stayed the same, but let me just remind you. Both of our guests have pre-picked 3 shares. Neither knows what the other holds. Each must accept at least one of their competitors' stocks. Now, the longer they leave it, the more likely they are to have to accept something they really don't like. Each of them has got 30 seconds to argue their stock picks, and stock pickers can choose any from the JSE top 100 or so, and each stock picker has got an offshore allowance, 1 international share per round from select exchanges. We've looked in Australia, and we've looked in Germany, and we've looked in the United States and the United Kingdom, and we've said take some of the top shares from there. It gives you the global advantage. That's what we like to do here on Share Shootout. Now that we know what the rules are, let's get this battle in motion. Gary Booysens, you've won the previous series more times than we care to remember. You have a distinct advantage, height advantage, reach advantage. Plus, you also have possibly the most tasteless belt buckle in history. Please reassure me that that's not some sort of from some Oscar Pistorius garage sale that you went and picked a dollar sign and a pistol. Where did you get that from? Did your mum give it to you for Christmas?
Nah, actually, I bought it for the show. I bought it down in Dahlstrom.
Two votes for Gary Booysens.
I actually bought it. It was functional. I needed a belt at the time, and I couldn't.
Sorry,
resist.
You needed a belt, and you chose that on
I
purpose.
did choose that. It was that or a luminous green one.
No, I think you probably got quite a good deal. You don't care that much about share shootout, about the league here, Nic Norman Smith. So I'm going to make you go first because I think that's the way we need to play this game. And you are using your offshore allowance immediately, which is nice and brave. I'm interested to see where you go with this. You're going to the financial services sector. It's a battered American financial services sector. I'm hoping Gary Booysen knows something about the company that you're about to pick so that he can tear it to shreds, because he has got the coolest belt buckle outside of Pretoria. In 30 seconds, tell me why you like Wells Fargo.
Okay, Wells Fargo is the biggest mortgage lender in the States. So it's a very simple, this is what banking used to be. Take money in, put it together, lend it out. No funny investment banking taking on huge risk. They have a third of the US mortgage market. It's a great market to be because that market's been under significant pressure. So the downside risk of those mortgages is low because housing prices are very cheap at the moment. They bought Wachovia in the midst of the financial crisis, which is another lender. So they got a really good deal for it, and they now have the most extensive distribution network. Why this bank is better than all the others is that the cost of borrow is very, very cheap. So what happens is...
Didn't they once burn themselves that way before? Your 30 seconds are up. I've been counting in the back of my head. Producers, we need the clock, please, to put pressure on our contestants. We can't hear it on the floor, but I counted to 30 seconds-ish. I need to ask him some questions. I need to Barry Roo the hell out of him as we sit in the recess. But isn't that what got America into trouble in the first place? Was the fact that money was too cheap for too long, and now these guys are still doing cheap mortgages.
No, but that's the beauty, was that back then everyone made the mistakes when housing was at a record high. That came off 30-40%. So all of the trouble has come out, and they've taken advantage of Wachovia, which was a really badly run bank, and bought this mortgage. So they've now got bigger scale. And the beauty of this bank, just to finish that off, is that because they've got such a large amount of penetration with their clients in terms of products, they've got a cheaper cost of funding than anyone else.
Okay.
So they manufacture the product.
They do what South African banks have failed to do, and that is do cross-selling. So there's an incentive for me to have a credit card, a checkbook, a vehicle loan, a mortgage with you, plus some short-term debt.
And because you've got so many products, I pay you a rubbish interest rate on your savings, and you still stay with me. It's the discovery model. That's why they try and get you in as much as possible and hook you in.
That's very good. I like that story. Gary, there's a lot to like about it.
No, I think there's a lot to like about it. I'm going to accept this one as well. But I think also because you've also got the Fed sort of on your side, desperately trying to inflate sort of housing prices as well. So I think the quality of the assets is probably improving as well. The one gripe that I probably would have with it is just the regulation around banking, especially. I mean, after the financial crisis, I mean, don't you look at Wells Fargo and say, listen, they've got a lot of risk, just from changing landscape.
Yeah, but remember the regulation that is really the real problem is a lot of the investment banking and all the weird, strange products. This is a very simple thing, and people and the authorities want people to own houses. It's a big thing, and clearly that did get them into some trouble. So, but yes, you do have to factor that in. Regulation's always going to be an issue. But after every banking crisis, people say, the banks are dead because of the regulation. Factor that in. That's why it's trading at 1.6 times book and 12 times earnings. That's not expensive for a company that actually has quite significant growth potential. So as value investors, we don't mind growth. We just don't want to pay for it, and we don't think you're paying for it here.
So the Wells Fargo story is compelling, and that's all well and good. Toward the end of last year, though, we had the US Fed telling us that America was recovering. Now they say, we're not so sure. We may delay tapering for a little longer than had been anticipated. Isn't Wells Fargo going to be a victim of perhaps the unanticipated slower recovery in the United States?
No, and this is the beauty of paying the right price for great businesses. You don't need to be able to predict just exactly when this economy is going to turn. But if you look at the numbers, if you want to buy a house in America and rent it out, you're getting rental yields of around 10%. You can borrow at 4.5%. Compare that to South Africa, where you're borrowing at 7-8 and you're getting a rental yield of maybe 5 or 6. So what that just shows you is that the market is underpriced. So even if we get a bit of a volatile economy, it's off a low base and you will get through.
We're not going to argue about this anymore because Gary Booysen has already accepted Wells Fargo. He's taking his offshore allowance from you this evening. So Wells Fargo gets the thumbs up. Gary Booysen, let's go on to your first pick this evening. It's entirely predictable. It's entirely likable. It is very expensive. It is the company that is often criticized for being expensive, but in recent memory, it has always been expensive. And no, it's not famous brands. It's Aspen Pharmacare. In 30 seconds, tell me why you like it.
Yeah, Aspen Pharmacare, I mean, it's an absolute stalwart. You say it's expensive, but I mean, it's trading on a P of about 33, forward P of about 24, but even that forward BE, we don't believe is quite discounting what's going to happen when they really bed down the Merck deal, the infant milk formula deals, the Glaxo deal, like so I think there's a lot of earnings that haven't come through yet, which are obviously going to be fantastic for the company. It's well diversified. Even if you are looking at it slightly more expensive, the risk premium we think is fairly low, just because I mean their revenue is sort of divided Latin America, Asia, Africa fairly evenly.
Okay, and you can't go wrong on drugs, can you, Nic Norman Smith?
Well, you can go wrong on anything when you're paying 33 times earnings. It's a little bit expensive.
Oh, come on, it's
outrageously
like
expensive.
Tani Metanatbrook. This is a company that's always been expensive. People were paying that for Capitec happily, and the share price has happily grown into the multiple. Yeah. Why can this share price not grow into the multiple?
These stories do until they don't. And the problem is when it turns out badly on 33 times earnings, my goodness, watch out, because it can be very poor. So, and what makes people feel safe is that great company, well run, has had a history of growing. But the stats show you when you're paying this kind of multiple, you might get the odd Capitec right and tell your mates about it, but wow, watch out. Johnson & Johnson, the premier pharmaceutical and well-diversified global company in the world, is trading at less than 20 times earnings. And this is trading at 33 times earnings.
This is a better growth story than Johnson & Johnson.
Yeah, growth stories hurt you more than help you.
Okay, well, come on.
I can't believe Value Guy didn't pick his offshore players. Berkshire Hathaway. I mean, value investing underperformed 4 out of the last 5 years? I don't know. Looking at Aspen, I mean, yeah, like 100%. But I mean, looking at the forward PE, I mean, 15, that isn't particularly demanding. You look at it, they've sealed these deals. These earnings are going to come through. I mean, they've got Africa, South Africa's a springboard into Africa. They've got Australia as a springboard into China. I mean, what guys are dubbing, like farm merging, to just chuck some jargon around. But I mean, I think the growth prospects there are fantastic. I mean, like you've got almost the demographics to back the story. So I'm still backing it.
We had the demographics to back the resource supercycle story. That didn't work out so well. So yeah, it's a great company, and certainly
But you're not prepared to pay 30 times last year's profits?
Absolutely not.
There we go. So you're shooting it down.
For sure.
In flames. Gary Booysen? I think he's wrong, for the record, but what I think doesn't matter anymore. Have I mentioned that? Okay, so Gary Booysen, you've been shot down. You accepted Nic's Wells Fargo pick, but Nic isn't going to play fair or play nice. I like that, Nic. I like it. Nice and vociferous in your criticism. Okay, Nic Norman Smith, let's go on to your second stock pick. And if you're having a go at him for choosing Aspen, we're going to need a psychologist's couch in this place for you to explain your next pick. I know you like deep value. I know that you like to take a long-term view. But come on. You need more than 30 seconds, but you've only got 30 seconds for Impala Platinum.
Fantastic commodity way at the bottom of the cycle, trading at historical lows. So you're paying a very cheap price. Great option on Zimbabwe because so this is the second biggest platinum producer. Great metal. It's diversified across geographies and across industries. From cars to televisions to jewelry, from China to the States to Europe, and there's a very big supply constraint, as we've seen. So this is priced in for all the stuff that Gary's going to talk about, the labor.
When last did somebody actually dig an ounce of platinum out of the ground in Rustenburg?
Yeah, it's been a while, and what's that going to do? It's going to push the price up, and eventually it is going to
Which is fine if you've got a stockpile of platinum to sell. But you've eroded your stockpiles because the strike has been going on for more than 3 months now.
They'll eventually start digging, and I'm very excited to see the CEOs playing quite hardball and talking about selling off these assets. So what's very sad, Bruce, the only people that are going to lose here are the poor workers, because this is a metal you can't get anywhere else. It's not about to be replaced anytime soon. So the price will move up. Okay. It has to, otherwise people will stop producing. It's basic economics.
Gary Booysen, I mean, yeah, we accept all of that, but do you have the metal, METTLE, to take this one?
No, of course not. No, of course I'm going to shoot that down. I mean, I just want Nic to sort of explain to me how, okay, Impala is obviously one of the large 3 platinum miners. If you're going to get, a price movement because of a supply constraint, it's obviously the big price guys are not able to deliver to their customers. Surely you would be looking at like an Aquarius, an Atlatza, someone that's small.
You look at Aquarius in the last month, there's like 40 or 50% up.
Exactly. You look at something that's going to be able to supply metal when the big guys can't supply metal. You don't look at one of the big guys that can't supply metal.
The risk is that this industry is in turmoil, and it may go on longer than we think. So what you want is a big company that has the metal to withstand all of that. yes, you can take on more risk and maybe get more upside on one of the smaller guys. But if this strike goes on for a really long time and the industry really comes under pressure, maybe they'll go out of business. So we'd rather
But
be a little
if
bit
they're the
safer.
ones who are actually digging and supplying into this higher price, they're the ones who are benefiting from the strike.
Yes, but they, as I said, what if that price doesn't go up for a while? So
Okay.
for whatever reason, the share price remains, the platinum price remains low, then these people are going to be losing money and they're going to be under pressure.
Including Impala Platinum.
Including Impala.
But they can withstand it. That's the thesis.
Can
the
they,
big guys that
I
got
mean,
the
already
capital
they've
to
got
withstand
shafts on care and maintenance already.
Exactly,
Already
preserving their capital.
Okay, and this is why the market is so interesting, because they're guys like you and they're guys like you, and you're prepared to take very strong positions. You're shooting it down, I take it?
You struggle to convince me that I should buy a company that's on the basis that it's not producing its good.
Okay, all right. It's Nick, I think you've been shot down on that particular one. Compelling, strong, but wrong. I just said that because it rhymed and it was spontaneous. Nic Norman Smith shot down on Impala Platinum. It was one of the market's favourite shares 2 or 3 years ago. It certainly isn't anymore. Gary Booysen, your second stock pick this evening, is in a price range that is going to appeal to Nic Norman Smith. I think he's going to accept it because he's a cheapskate. But there's a lot of risk associated. In 30 seconds, please, with Sasol.
Sasol, I think fantastic business. I mean, obviously the big kicker for Sasol is going to be the Louisiana project. Building the ethylene cracker, doing coal to liquids in the US, taking advantage of obviously the supply of natural gas there. It is a risk to the company, but looking on a PE of 9, it doesn't look like it's priced in at all. It looks, I mean, the analysts have done stress tests on the balance sheet. They're quite happy with it, and generally a fantastic business. I mean, a nice rand hedge. I mean, I haven't gone offshore with any of my picks, but I get my earnings from offshore. And I get a nice currency hedge with it as well.
You can't argue against that.
No, fantastic business. The only risk is the reinvestment risk, so that Louisiana and the American investments could take a significant amount of capital. So you've got a cash printer sitting in South Africa. The question is, what are they going to do with that capital? But at 10 times earnings, at least that's priced into to a certain extent. So no, we like it. It's one of our
it pays a nice dividend. It's a nice regular earner. They're looking at cutting massively the cost base in South Africa, which is the big cash cow. And if they do get America right, and if natural gas prices do remain elevated and America becomes energy self-sufficient, if there's a really good story, and they can practice their fracking there, and then hopefully come and do it here as well, and make us more energy independent too.
Yeah, no, I find very little negative things to him. It is getting towards the upper end of the price we're willing to pay because we are such cheapskates. I mean, we've been buying this for a number of years now, but it's attractive. It's a good business. As I say, don't underestimate that reinvestment risk. If they get it wrong, suddenly 10 times earnings doesn't look so cheap. But on the balance of probabilities, a great company.
There we go. We have agreement on 2 stock picks this evening. You've got to decide who wins this match. What you need to do in order to do so is to follow @SSO League on Twitter. And you vote for either Running Dog, who in this case is the very tall Gary Booysen, or Value Guy, who's the cheapskate, and decide who wins this round. Now, just to refresh your memory, what Nic Norman Smith from Lentus Asset Management, Value Guy, has chosen tonight, Wells Fargo and Impala Platinum. Gary Booysen nearly laughed out loud when he heard that Nick was talking about Impala Platinum. He doesn't like it one little bit. However, Wells Fargo, he'll take. That's the offshore allowance. Gary Booysen not using his offshore allowance so far this evening, but taking 2 companies that do earn substantial amount of their earnings from offshore. Aspen Pharmacare is one. Too expensive for Nick's tastes, but Sasol gets the big Nic Norman Smith thumbs up. We'll see you on the flip side of the ad break for the final stock picks, and we need you to apply your grey matter this evening and decide who should win this round and move up the share shootout league table. You're watching Share Shootout League right here on CNBC Africa, the only league that used to have a referee. You know the person in charge of the match. Well, it used to be me. This is match day 3, and this, of course, is very, very important. Through your vote on Twitter, one of our stock pickers can change the look of the table. So what you do is you follow @SSO League on Twitter. You vote for either #RunningDog or #Value Guy. Well, before the break, Running Dog and Value Guy both gave us their stock picks, and we had from Value Guy, Wells Fargo and Impala Platinum. Wells Fargo was accepted, but Impala Platinum was shot down in flames. And then Running Dog, who is otherwise known as Gary Booysen to his friends and family, Aspen and Sasol. Aspen laughed out of town for the price, and Sasol accepted. Let's get to the last stock picks of the evening. Gary Booysen, you need to go first as we go into the final round, where it is neck and neck, and it is very tense, and viewers at home are sitting ready to vote for either one of you. At this stage are undecided. You need to make a bloomin' good argument in the last couple of minutes of the show. 30 seconds, please, on MTN.
Obviously, great diversification into Africa. It's been a stalwart. It pays massive progressive dividends. It's hugely cash generative. But I mean, something the whole theme in telecoms at the moment is obviously the increasing data. I mean, their biggest market is Nigeria, which is about sort of plus 50 million subscribers. They only have 5 million data subscribers. So the growth there can still be absolutely enormous. South Africa is sort of a lesser portion of the pie, also around hedge stock.
Fair enough. But here we've got a situation where fairly recently they've announced the 79 cents a minute response to Cell C. It may be long, it could be a short-lived promotion. We don't know how it's going to play out. Vodacom's going to have to respond to this. We're going to have a price war. Doesn't that undermine the earnings into the future, Nick?
Number of issues. Country risk. Africa is a risky place to do business. The reason they've did so well over the years is because they did it when no one wanted to go there and was priced cheaply. Regulatory risk. The regulators around Africa want to push down the cost of communications. We've seen it here, so they mess up the market, to put it bluntly. And that margin risk, especially in South Africa, is huge. Another thing is data might look like an exciting growth potential, but the margins on data are much, much lower than the margins on voice, because
I need Gary to respond to your criticisms, your vicious sleight of hand. Gary, some thoughts on those multiple issues?
Yeah. Okay. One, obviously, the price war that hasn't yet happened, but might happen now. I mean, MTN has historically, it's had a higher ARPU than Vodacom and Cell C, etc. They've got the pricing power in South Africa. I mean, I think them taking the first step in the potential price war is really just to squeeze the rest of the competitors down to nothing. I mean, they with the earnings that they have from offshore, they can keep prices low, wait until these companies sort of pale into insignificance, then re-hike the prices. So I'm not too worried about that. Like I said, also South Africa is a small portion of MTN's overall pie.
We need to leave it. Compelling arguments, but you're shooting it down based simply on the fact that margins are being squeezed to virtually nothing. Shot down, Gary Booysen. Your final pick, Nic Norman Smith, or Value Guy, is an interesting one. A bunch of communists running a capitalist business. Now, this is uncharacteristic because it's on an historical multiple of 16 times, but it could very well find itself as the controlling shareholder of Tsogo if SAB Miller has its way. 30 seconds, why you like HCI.
It's an investment holding company, so you can't look at an earnings multiple like that. It's not really an accurate way to value it. So this is an investment holding company, 2 major assets, a big stake in ETV, and a big stake in Tsogo. Tsogo in particular is a great asset at a low point in the cycle, so you're getting it cheaply. What's beautiful is that you also get a few other sets of assets basically for nothing, so you're paying a discount to a company that could very well be trading at a premium given the historical performance of their managers.
Okay, there's a lot to like about HCI. It really has been a phenomenal success story, Gary. Dare you shoot it down?
I'm going to shoot it down. I think with the SAB, they've obviously mentioned that they might sort of unbundle their stake. I think that whole deal is going to get very, very difficult for them, because I think 20% is in the free float, and I don't think they're going to get it at the price that they want personally. So I mean, overall, I think like you said, it is fairly cheap. But I mean, with the weakening rand, you've seen a lot of you've seen tourism spiking, you've seen sort of gaming sales doing well, but overall, not one for me.
Okay, he doesn't like it very much. Last ditch effort to change his mind?
Yeah, if you're going to back anyone to pay the right price, it's the management team there. They also own 17% of the business, which is great. I would argue that if the Sasol free float comes out, you might actually get some of the bigger managers who couldn't buy it because it's too small. So that may be why the price is actually depressed and the value is under there. The final and best thing about this is that holding companies often trade at a discount. The difference is the value unlock is coming. They've spun off ETV into Sasol. They've listed Nivius and their smaller gaming operations. So what they're doing is they're showing you they've got an offshore gas operation in the States, which they're looking to list as well. So that value unlock's coming, and that's why the shares almost doubled in the last year and a half and still looks quite attractive.
And he's going to keep riding that pony until it drops. Nic Norman Smith. You're shooting it down there, Gary?
Shooting it down.
Okay, that brings us to this part of the show where you're watching Share Shootout League right here on CNBC Africa, and we need you now to vote. Okay, so that's what we need you to do. What you do is you go onto twitter.com, you register on twitter.com, and then you vote for the person you think made the most compelling arguments. That's what we have to do here on Share Shootout League. So remember, we are counting your votes until midnight on Sunday. These guys need your votes. So follow at SSO League and vote for whichever one of these two. They call them gentlemen, are my producers, but these two guys, these oaks, the best one that impressed you. We may know, we don't know about the credibility of the election tally. You can trust us because we trust you. Join us again next time right here on CNBC Africa next Tuesday, 8:30 for match day 4 between The One and She-Town to go head to head. There's still a grueling 37 weeks to go before we crown the winner of the most unrelenting stock picking challenge television has ever seen. So don't forget, follow at SSO League. Give us your thoughts on the players, the league, and you can also have cheap shots at their stock picks. We like cheap shots. They like cheap shots too. Till next week, enjoy the rest of your week and do please stay cunning. Good night.